And Fed Powell said inflation has been running somewhat above goal. Yep. He also said current policy stance leaves us well positioned. But what you had on Thursday, Fed's Waller came out and said the Fed is in position as early as July for cuts. So he's obviously one of the key doves.
Yeah.
And the equity market rallied on that. It didn't rally on the sort of stagflationary events, but it rallied on that. The equity market wants to rally on whatever good news it can.
Yeah.
But you've had Jeffrey Gundlach, the bond market, the bond king, huge hedge fund manager. He's come out saying it's clear the Fed thinks the next move in rates is lower.
Yeah, yeah. And what's interesting as well is that they don't perceive uncertainty to be higher than last meeting, even despite all the tensions in Israel.
Middle East, that's unbelievable.
And, you know, even with Trump kind of going back and forth on tariffs now he's kind of moderated his tariff rhetoric a little bit, but you never know. Compared to the last meeting, they're seeing uncertainty as unchanged. So potentially, you know, that could, if that starts to trend lower in their view, that could open the door for some earlier cuts in perhaps even July. I think July might be a bit soon, but
I think so, unless you see a deterioration in employment, because with oil price here, that's going to keep a bit under inflation.
Yeah. And at the moment, you know, a key offset for headline inflation is energy in the US. You know, we've got gas prices a lot lower, gasoline prices much lower year on year. So that's really weighing on the headline statistic. If we start to see that base effect drop out due to the heightened geopolitical risk driving oil prices higher, that could see inflation really start to rise quickly.